Get ready, crypto enthusiasts, because the market is absolutely exploding with critical updates you cannot afford to miss. We're diving headfirst into a whirlwind of news that's reshaping the landscape, and you're getting the inside scoop right here, right now. From major economic forecasts that have the big players talking to strategic market movements, this is the pulse-pounding, fast-paced rundown that keeps you ahead of the curve. If you thought things were moving fast before, buckle up. The pace is about to hit hyperspeed. We've got insights that could redefine your strategy and position you for what's next. Don't get left behind. Stay locked in for the unmissable intel that matters most. Let's go. Bitcoin's correction as a catalyst for altcoin gains, strategic entry points, and high-potential projects. We're kicking things off with a deep dive into Bitcoin's recent market movements and what they mean for the altcoin universe. Is this correction actually a golden ticket for other digital assets? We're breaking down the strategic entry points and spotlighting the projects that could be poised for explosive growth. You'll want to see this analysis to understand where the smart money might be flowing next. Next up, we're tackling a stark warning about the global economic stage. Renowned figures are sounding the alarm on Europe's financial stability, painting a picture of potential crisis. We'll explore the implications and hear the urgent calls for adopting Bitcoin as a hedge against these turbulent times. This is crucial context for understanding the broader economic forces at play. Then, we shift our focus to the crucial economic indicators that could dictate the Federal Reserve's next move. With inflation and the job market sending mixed signals, this week's data releases are absolutely pivotal. We're dissecting jobless claims, productivity figures, and the jobs report to understand how they might influence interest rates and, by extension, the crypto market. Get ready for a strategic breakdown of what to watch and why it matters. And finally, we're circling back to the impact of Bitcoin's correction, but this time focusing on its potential to fuel altcoin dominance in the coming year. We'll examine the trends and projections that suggest a significant shift in market power. This is the big picture view you need to navigate the evolving crypto ecosystem. Hit that like button, subscribe for all the latest, and ring that notification bell so you never miss an update. Let's get into it. Bitcoin's correction offers altcoin opportunity. We're witnessing a significant shift in the digital asset market as Bitcoin experiences a notable correction, a development that many analysts believe could serve as a powerful catalyst for altcoin gains. This period of adjustment for the market leader is creating strategic entry points for investors looking to capitalize on the potential growth of other cryptocurrencies. Understanding these dynamics is crucial for navigating the current market and identifying promising opportunities. The current market sentiment suggests that as Bitcoin consolidates, capital may begin to flow into altcoins, seeking higher returns and diversification. This pattern has been observed in previous market cycles, where periods of Bitcoin dominance are often followed by altcoin rallies. The correction phase, rather than being a purely negative event, is being reframed as a necessary step for a healthier, more sustainable market expansion. It allows for the reevaluation of projects based on their underlying technology, utility, and community, rather than just their correlation with Bitcoin's price movements. Several factors are contributing to this potential altcoin surge. Firstly, the maturation of blockchain technology and the increasing adoption of decentralized applications, DApps, across various sectors are giving utility to many altcoins. Projects focused on areas like decentralized finance, DeFi, non-fungible tokens, NFTs, gaming, and supply chain management are gaining traction. Secondly, as the market becomes more sophisticated, investors are looking beyond Bitcoin for innovation and growth potential. Altcoins often represent the cutting edge of blockchain technology, offering novel solutions to real-world problems. Identifying these high-potential projects requires a thorough analysis of their development teams, tokenomics, roadmap, and community engagement. Some categories of altcoins that are drawing particular attention include those with strong use cases in scalability solutions, cross-chain interoperability, and privacy-enhancing technologies. The narrative around a potential altcoin season is gaining momentum, fueled by the anticipation that as Bitcoin's market share stabilizes, The remaining market capitalization will be distributed among a select group of altcoins that demonstrate superior innovation and adoption. Investors are advised to conduct thorough due diligence, looking for projects with clear value propositions and sustainable business models. The volatility inherent in the altcoin market means that while the potential for gains is high, so is the risk. Therefore, a diversified approach, coupled with a long-term perspective, is often recommended. The current correction in Bitcoin provides an opportune moment to research and position oneself for potential future growth in the altcoin space, focusing on projects that have the resilience and innovation to thrive amidst market fluctuations. But is this correction just a blip, or the start of something bigger for the altcoin market? Stay tuned as we break down the global economic outlook that's making waves. Europe crisis spurs Max Keiser's Bitcoin adoption plea. In a stark and urgent warning, prominent financial commentator Robert Kiyosaki, author of the best-selling Rich Dad Poor Dad series, has declared that Europe is toast, citing significant financial instability across the continent. This dire assessment, amplified by Bitcoin advocate Max Keiser, highlights a growing loss of confidence in Western nations' ability to manage debt and economic crises, pushing a strong narrative for Bitcoin adoption as a hedge against global economic turmoil. Kiyosaki's warning is rooted in several critical observations. He points to the potential for France to face bankruptcy, Germany's manufacturing sector struggling under the weight of failed energy policies, and the United Kingdom experiencing a dramatic downturn in its bond market, with a reported drop of over 30%. These indicators suggest a systemic weakening of major European economies. Furthermore, Kiyosaki notes a broader trend of major economies, including Japan and China, reducing their holdings of U.S. treasuries, signaling a potential shift in global financial power and a de-risking from traditional safe haven assets. He emphasizes that the collapse of the traditional 60-40 portfolio, where U.S. treasuries have seen a significant decline since 2020, further undermines conventional investment strategies, leaving individuals exposed. Max Keiser, who also serves as a Bitcoin advisor to the president of El Salvador, has lent his voice to these concerns, framing the current turmoil in France as indicative of a fourth turning, a term used to describe generational crisis cycles. Keiser has actively promoted El Salvador, the first country to adopt Bitcoin as legal tender, as a safe haven for those seeking refuge from collapsing fiat currencies. He advises individuals to consider relocating to El Salvador, stating, "Move to El Salvador, we are exiting the fourth turning, before France requires an exit visa to leave." This perspective positions El Salvador, and, by extension, Bitcoin, as a proactive solution for navigating unprecedented economic challenges. The commentary from Kiyosaki and Keiser resonates with broader historical parallels drawn by other analysts, who compare the current situation to the decline of past empires. Recurring themes of excessive debt, involvement in conflicts, and a disconnect between ruling classes and the realities faced by their populations are highlighted as common precursors to economic collapse. One analyst succinctly put it, "Europe isn't just toast. It's the same script every fallen empire runs on repeat: too much debt, too many wars, ruling classes too detached from reality. Rome clipped its coins. Britain lost its empire under debt. Now France, Germany, UK are all cracking." While some financial educators suggest a more balanced approach, advocating for a mix of gold, silver, and Bitcoin as hedges, the prevailing sentiment from Kiyosaki and Keiser is a clear endorsement of Bitcoin as the primary vehicle for financial preservation amid escalating global economic uncertainty. Their calls for adoption are not just about investment, but about safeguarding wealth in an increasingly unpredictable financial world. While global economic storms gather, what crucial data points are setting the stage for Bitcoin's immediate future? We're breaking down this week's economic events next. Economic data set to dictate Fed's next move for Bitcoin. Bitcoin has concluded August with a notable correction, ending the month on a negative note, as the market eagerly awaits key macroeconomic data releases. These figures are expected to heavily influence the U.S. Federal Reserve's upcoming decision on interest rates, creating a period of heightened anticipation and potential volatility for the cryptocurrency market. The economic calendar this week is particularly significant, featuring a trifecta of critical reports: jobless claims, U.S. productivity, and the August jobs report. The Federal Reserve faces a complex challenge, attempting to balance rising inflation with signs of a weakening job market. Experts suggest that the Fed is navigating a precarious path, where acting too soon on rate cuts could reignite inflation reminiscent of the 1970s, while maintaining current rates risks triggering a recession by further straining the labor market. This delicate balancing act places immense pressure on Fed Chair Jerome Powell, making this week's data releases more crucial than ever. On Thursday, the initial jobless claims report will be under intense scrutiny. The consensus forecast anticipates around 230,000 new unemployment claims, a figure largely consistent with the previous week's 229,000. However, any reading exceeding this threshold would signal a continued softening of the labor market, potentially increasing the likelihood of the Fed considering interest rate reductions. Following closely on the same day are the final revisions for U.S. productivity and unit labor costs for the second quarter of 2025. Preliminary data indicated a 2.4% annualized growth in productivity and a 1.6% increase in unit labor costs, a notable decrease from the previous quarter's 6.9%. A downward revision in productivity or an upward revision in unit labor costs could raise concerns about persistent inflationary pressures, suggesting that higher labor costs might be translating into price increases. Friday's employment figures, including the unemployment rate and non-farm payrolls, are also critical. Forecasts project the unemployment rate to tick up to 4.3% from July's 4.2%, with an addition of 75,000 jobs, a slight increase from July's 73,000. Wage growth is anticipated to be around 0.3% month-over-month. However, some analysts offer a more cautious outlook. Sue Han, director of liquid fund at Hashkey Capital, predicts payrolls to come in lower than consensus, potentially between 40,000 and 60,000, with unemployment rising to 4.3%. Han notes a gradual weakening in hiring and suggests that markets might be underestimating the risk of larger layoffs ahead. This scenario could prompt the Fed to consider not just a single 25 basis point cut in September, but a series of cuts extending into late 2025. Interestingly, this perspective suggests that weaker economic data might not be detrimental to Bitcoin. Instead, it could provide the clarity needed for the Fed's rate path, potentially acting as a green light for risk assets like Bitcoin by bolstering expectations of looser monetary policy and increased liquidity. Despite this potential upside, caution remains due to bearish September seasonality, historically the weakest month for Bitcoin. Experts recommend focusing on the medium short-term holder cost basis during this potentially volatile period. Bitcoin closed August with a 6.47% loss, currently trading around $107,500. As we digest these economic signals, what does Bitcoin's current correction mean for the broader altcoin market's dominance in the coming year? We'll explore that next. Bitcoin correction fuels altcoin dominance outlook for Q4 2025. As Bitcoin navigates a period of correction, the market is increasingly viewing this phase not as a downturn, but as a potential catalyst for a significant shift in dominance towards altcoins, particularly heading into the fourth quarter of 2025. This strategic realignment suggests that while the market leader consolidates, a substantial portion of capital and attention may pivot towards alternative digital assets poised for substantial growth. The current market dynamics are being closely watched by investors and analysts alike. The correction experienced by Bitcoin, while causing some short-term apprehension, is being interpreted by many as a necessary market recalibration. This process often precedes a period where smaller, innovative projects within the altcoin space can capture investor interest and market share. The narrative is building that as Bitcoin finds its footing, the focus will intensify on altcoins that offer unique technological advancements, robust utility, and strong community backing. This could lead to a scenario where altcoins outperform Bitcoin in terms of percentage gains, a phenomenon often referred to as altcoin season. Several factors are contributing to this optimistic outlook for altcoins. Firstly, the continuous development and adoption of blockchain technology across various sectors, including decentralized finance, DeFi, non-fungible tokens, NFTs, gaming, and supply chain management, are providing tangible use cases for many altcoins. These projects are moving beyond speculative trading to offer real-world solutions, attracting both retail and institutional interest. Secondly, the increasing sophistication of the cryptocurrency market means that investors are actively seeking diversification and higher growth potential beyond the established market leaders. Altcoins often represent the frontier of innovation, introducing novel concepts and technologies that can disrupt existing industries. Identifying which altcoins are most likely to benefit from this trend requires careful analysis. Projects focusing on scalability solutions, which address the transaction speed and cost limitations of some blockchains, are particularly noteworthy. Furthermore, those enabling seamless cross-chain interoperability, allowing different blockchains to communicate and interact, are expected to play a crucial role in the future of decentralized ecosystems. Privacy-enhancing technologies are also gaining traction as concerns about data security and user anonymity continue to grow. The potential for altcoin dominance in Q4 2025 is being fueled by the expectation that as Bitcoin's market capitalization matures, the remaining capital within the broader crypto market will be deployed into a curated selection of altcoins. These are the projects that demonstrate resilience, innovation, and a clear path to adoption. While the altcoin market is inherently more volatile than Bitcoin, the potential rewards for strategic investments during this period of correction could be substantial. Investors are being advised to conduct thorough due diligence, focusing on projects with solid fundamentals, active development teams, and clear roadmaps. Diversification across different altcoin categories and a long-term investment horizon are often recommended strategies to mitigate risk and maximize potential returns. The current market environment, characterized by Bitcoin's correction, presents a strategic window for investors to identify and position themselves within the altcoin ecosystem ahead of anticipated growth. Now that we've covered the major market shifts, let's recap the key takeaways from today's explosive updates. Stay tuned. And that's a wrap on today's critical market updates. We saw Bitcoin's correction potentially paving the way for altcoin gains, heard urgent warnings about Europe's economy driving calls for Bitcoin adoption, dissected the key economic data that will shape the Fed's next moves, and explored how Bitcoin's correction could lead to altcoin dominance. Don't miss out on any future insights. Hit that like button, subscribe to Bitcoin Bulletin, smash that notification bell, leave a comment with your thoughts, and follow us on all social platforms for continuous updates.